Good day. Ira Epstein, and here we are with your end of the day trading for Wednesday, the 19th of October, 2022. So the battle goes on. Yesterday, actually at the beginning of the week, we've noticed a couple of things. Number one, I noticed that the market was fighting a battle now between good earnings, bad earnings, and what the Fed's going to do. Now, we've seen the Fed members roll out today. There were 3 of them speaking. They're pretty universal in what they're saying. Mr. Bullard's always the most outspoken, and he said 75 basis points in November, and then you have to wait and see the jobs data, the CPI numbers, and other data that's going to come in to know what you're going to do in December. He gave no indication there won't be a rate hike. Is it 75 basis points or 50? He's very much open to the idea that once the inflation starts falling, and you can see it start falling, and he's not talking about headline, he wants to see the core, at that point, the Fed can pause. You might call that a pivot. A pivot would mean you go the other way. That's not what they're quite going to do. It's going to be the pause. How long of a pause? Well, when you look at Mr. Kashari, what does he say? It's a long pause. You got to make sure that it sets in. So that's the battleground you've got. And if you're trying to make the best out of it one way or the other, it's all kinds of battles. Now, you can see you were down in all the key indices. IBM came out with great earnings late in the day, so we'll see just what those numbers do for the market. I saw them up about 5% at one point on a pop. Tesla missed on numbers, so they'll be down a little bit. They closed up, but they were down because they had missed on some of the numbers. So this is what you're going to get. And it's going to be this way from now into next week. Then we get the ECB on I think it's the 27th is their meeting. We're the 2nd of November, and then the Bank of England. So you're getting all the bank numbers. So right now, it's clear sailing to keep the earnings the number one important thing. When we saw housing numbers, and there'll be more of them out tomorrow, you can see that you're getting contraction everywhere you look in it. But that's part of the Fed's goal right here. They're trying to stop demand for a lot of goods. We'll see just where that fits in. So when I stay with my Walgreens, you can see the consolidation is still going on. When we take a look at swing lines, you still have a pattern of higher lows. These are the break lows, higher highs. The trend is up until and unless you get under 32.70. The support in the market, unfortunately for the bulls with this pattern, is that if you take that out to get to the support at 32.54, it'll take very little to get bearish again, because then any close underneath 32.54 would be an actual downtrend. You'd have lower highs, lower lows. On the other hand, if you don't get under this 32.70 level, where's the upside? Well, a potential target is the 50-day moving average in blue. Another one is the Bollinger. The Bollinger Band's the one closest, so 34.17 would be the number. It's about 80 cents away, so that's what you're looking at right now. Momentum-wise, you're already overbought. So you've used a lot of power to get up here. You're getting overbought. I don't see anything to make this market pick up and run. That's the problem. So I think you're going to see a lot of profit taking and liquidating of that particular market. As I told you, Netflix did a blowout yesterday. Here the market is. In the aftermarket, it was up 14% yesterday. It held on to most of that. You ended up 13.09%. You cleared the upper Bollinger Band. I saw that a number of companies went to an overweight in stock brokerages on it, which is fine. But the number they're looking for was around 285. The 200-day average is 281.22. I like that a lot better. I don't think you're going much beyond that on this particular run. Yes, if the whole market can pick up and run after some rate hikes, I can get excited. But on its own, it's going to have a headwind of the market as a total. That's what bothers me. Do I think they did well? Give them 10 stars. Those were great numbers. Apple stalling right here. You can see how you ran up and you ran into a brick wall at the 18-day average of closes. Should it decide that it's going to continue on and keep the momentum going, then I'll look for resistance between 151.29, the 100-day average, to the Bollinger Band. The Bollinger Band's hiding to get under that number tomorrow, the way that the chart setup is going. Momentum is still up until, and the word is until, this market on the current pattern takes out 140.26, 27 by hitting 26. The trend remains up in the market. When we come over to Disney, now as far as I'm concerned, today was bail day. You went up to the upper Bollinger Band. You went up there. You got up as high as 101.86. The Bollinger Top's 101.96. I mean, you're in that zone. This is where the pros are taking money. So the markets that got a lift because of Netflix, it's nice, but they're not Netflix. And that's the problem with them. I don't think you're going very far between that band and the 100-day average. I think the easy money is now out of the market, but I don't see how you could have got long this market. In order to buy it, you had to buy it all the way up here with a stop that was larger than what the profit potential was. Just something to not do. But it's also saying don't be short this anymore at this point. In XLF, yesterday you hit the upper band, just missed the 100-day average. Today you're giving that back. These Bollinger Bands are so darn important. When you hit them, and you'll see that over and over, you're in an area where the market likes to run into a problem. And from that problem, you have an opportunity because you're looking at the market saying, I don't want to play that game anymore, or I want to liquidate some of my holdings and I want to hold on to the other. But when you're not embedded and you make that run like that, so long, let somebody else take the risk from that point on. The same thing of XLI. You went up to those numbers, you're going to have a hard time right here up to the 100-day average. And I'm going to repeat. I think this is the week where earnings dominate the market, good or bad. That's what I think. And I think that at the end of next week, you're already thinking, I got to now look at the 2-day FOMC meeting. What is that going to do? They're going to be fairly aggressive. And then right after that, I've got to not only deal with that, a new set of jobs data and CPI numbers for the December. This is the sequence that you're in. You're going to be in that right through year end. Got it? I still look for a year-end rally, okay? So don't get me wrong. This rally that's coming right now, I had one of you write on Facebook, yeah, I expected this rally. This is not a surprise, okay? Where and how it came about was the surprise to me, that's all. And I didn't realize it was the earnings. Okay, my mistake. When I look at the semiconductor, how the market is just leaning down here, it's not even picking its head up. If it weren't for the rest of the market, I think you'd be in the toilet on this at the lower Bollinger Band. It's getting support. Watch out. I think the pros will sell this market if you get underneath yesterday's low of 145.02, looking for a fast move to wherever the Bollinger Band comes in. And their stop when that happens will be the high of either today, or if it's a bit higher tomorrow, one tick over that after you hit the low. Got it? In the home builders, I just can't get friendly this market. I'm looking at it, and how could you be friendly this? I mean, if you look at the MBA numbers, if you look at everything that's going on, you can't. The people that are buying homes, they're going to do it for cash, or they're so well-heeled, they need a smaller mortgage. First-time home buyers, they got a real problem. The builders got to get very creative. Why do we see in some cases starts picking up, for example? The reason for that is probably because those homes were under contract, the supplies came in. At some point, you got to build what you've taken the money on the contract. I seriously doubt there's any spec homes going up on that. When you look at the XLE, the energy sector still looks good. So what about President Biden today coming out with 15 million barrels out of the strategic reserves? We're selling it at 90. We're going to buy it back at 70. Number one, how do you know it's going back to 70? Number two, wise guy, why would you tell the market what you're going to do? Here's his thought. Hey, oil companies, at $70, you can make money. You're going to go out there and produce more oil. So I own an oil company. I'm going, gee. So as soon as they refill the reserves, they're not going to want to buy that oil. I'm stuck there. I just developed my oil wells. I've got infrastructure plays. My payback period is X period of time. It's not till he fills his reserve. And he's telling me to abandon my shareholders and take away and don't give them the dividend. Ha! That's what happens with lifetime politicians that surround themselves with people that, again, aren't business people. I don't think that's going to appeal to the business community. I could be very wrong. I don't get it. I'm a businessman. If I owned an oil company, I'm laughing at it going, wonderful. But I do thank you for putting a floor under the oil. Do you really think, President Biden, I'm going out there to do what you think? I'm not. That's my answer to you. I'm not. Change. Give me a ramp of a long-term change, 5 years or more, where you're not going to change policy. Your problem is you only have 2 years left in your presidency, and the next guy that comes in, I don't know what he's going to do if it's not you. Big problems. Just don't know. In GLD, you have lower highs, lower lows, market coming down. Why would you want to own gold in this? You took the 2-year note to 4.5%. You want me to buy gold? Get serious. You want to be short gold, not long gold. It's going lower until there's a reason to own it. You can't tell me it's about a war. We're in one. You can't tell me it's because of something with Iran. Today, the European Union went and sanctioned the heck out of 3 of their generals and the drone company that is supplying Ukraine and Russia to attack Ukraine with those drones. So what's going to make it go up? I don't see it, okay? I just don't see it. You got to break the dollar maybe. SLV, same problem with this. What do you want to own these metals for yet? Do you think industry's coming alive? Your best shot at was the Party Congress in China, and it doesn't look like they're doing anything. I did hear that they're about to build, I forgot the city to be honest, could be Hong Kong, but I'm not certain, a massive COVID center, not to treat it, an internment camp. I'm sure you're going to read about it in the news. This thing's like 35 acres. And that's going to be the solution? I'm speechless. I really don't know what to say. Copper. How can copper go if China doesn't do something about the property market? Now, they have until Sunday. It's only Wednesday. We'll see if they come up with anything. TLT, just sinking away. Why not? This is telling you the 20-year plus bonds, interest rates are going up. Don't forget that. They'll go up until they don't have to go up. It's going to not be determined by analysts telling you there's your pivot point. It's going to be determined by what's the jobs data, what's the CPI. Everything else doesn't matter. UUP, finding its legs at the 18-day average, but not trending. It's waiting to see what happens. And if that's not trending, that means the FXE is going nowhere. So these two are just fighting back and forth, looking to see what the next moves are going to be. You know, one of the things I like to do is give you trade ideas and teach you what to do. And our good friends at Modern Trader, they have some great articles that we came together with over the years. I have been with this magazine in terms of promoting them. Honest to God, got to be 3 decades. A long time. Futures Magazine, Modern Trader, all the same thing. Same company. All this. Great articles to teach you how to trade. And they still go with that, okay? So if you're looking to do something with people that write for the average guy out there, there are other magazines, Stocks and Commodities, which writes for you quant guys. I've tried reading it. I am so lost in the math that I don't even know my way out of it. In fact, I get dizzy when I read it. So that doesn't mean it's not great. If you're a quant guy, if you're writing formulas, that's another very good one. You know, you ask me different sources. How do you get this? We've made it into a PDF for you. Just go to our website under free offers. You'll see it there. Choose it as one of the many offers, or you can click right up here at any point. Take it from there. I'm Ira Epstein. I will see you all tomorrow. You have a great day.